Yeah, good morning everyone, and welcome to this morning call. Uh, we are seeing some bit positive signal from the international market, wherein the futures of the US market are showing positive sign and are up, mainly on account of the uh, reporting of the uh, some of the newspaper in the US that the implementation of the reciprocal duty may not be across the board, and same for all the sectors, and there could be some leeway in that, and that has resulted into futures moving up. Apart from that, Asian markets are more of a range bound or more of a flattish in today's morning trade, whereas some positiveness are seen in the metal, wherein steel and iron ore are up by around 1.5% and 2% respectively in the morning trade, whereas aluminum and copper are wherein copper is also up by around 1% and aluminum around 0.5% from this closing of the trading sessions in the equity on Friday. So, in all, indicating more of a positive trend, but we had seen last week quite a sharp up move in the market. So, need to be careful. There could be some profit booking which may be emerging in near futures. So, need to be careful about that. I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. This is Swati. Today, looking towards the global market, we believe that our market is likely to open with a gap of opening and positive momentum is likely to be carried forward in the near term. From the last 4 to 5 trading session, we are continuously witnessing a very strong positive rally on the Nifty as well as on the Bank Nifty front. And this is likely to be continued as long as Nifty sustains about 23,000 psychological mark, whereas Bank Nifty has a crucial support at around 50,000 psychological marks. Now, for today intraday purpose, the immediate resistance is placed at around 23,440 levels. Any move above that level, extension of this positive momentum can be seen towards 23,500 to 23,570 levels, whereas the support is placed at around 23,270, 23,200 levels. Coming towards the Bank Nifty, 50,840 is the first resistance level we need to keep eye on it. Beyond that level, 51,000 levels can be tested, whereas the support is placed at around 50,270 at 50,000 levels. So overall view on the Nifty and the Bank Nifty is positive. This rally is likely to be continued with the mentioned supports levels. So try to encash those rallies with the strict stop losses. That's it from my end. I request the derivative team to take a call forward.
Yeah. Thank you, Swati. On the derivative front, finally we are seeing that short covering action taking shape, which is a very positive sign. Above the open interest has gone above 2 crores, which is now around that 1.8 odd crores. So we are seeing finally, shedding of open interest shorts are covering, which is a very good sign. So, yeah, the rally can probably witness further buying now. Also, 23,500, 23,600 calls do not have lot of open interest built up. That does suggest that the call writers are not confident that the markets will stop around the 23,500 or 600 levels, which means this rally should continue upwards, and 24,000 has the highest call base, which can probably take Nifty towards that 24,000 levels going forward. So look out for the same. Good support area is being built in around 23,200 to 23,000 levels. The VIX continues to remain low. PCROI is at comfortable levels. So all in all, a positive outlook. Stock specific banking also is witnessing short covering action, and it should also witness some more buying going forward. So yeah, look out for the same. Most of the banks should do well. HDFC, Kotak are two stocks which have broken out. Axis is also on the verge of breakout. So yeah, all these banks can do well going forward. Look out for the same. That's it from my side. Like to ask the fundamental team to take over, please.
Good morning, everyone. There is update from the Alembic Pharma side. Alembic Pharma's API 3 facility at Karakhadi had a scheduled GMP inspection from US FDA, which is conducted from March 17 to March 21. The inspection has completed and received no Form 483 observations, so this is positive for the company. Thank you.
Good morning, everyone. Last week we met the management of CE Insys Technology Limited. CE Insys Tech, just to give a background about the company, it was incorporated in 1998 by Nagpur-based Meghe Group. The company basically is into two segments. First one is into geospatial solutions, and the second one is the engineering IT solutions business. So, talking about the first business of geospatial one, it contributes around 59% to the top line, and the company has over 25 years of experience in this business, serving mainly the government and the large corporates in the sectors like water, energy, transportation, oil and gas, etc. The company provides end-to-end engineering consultancy, and it covers all the project phases like management, oversight, third-party inspection, and thus it differentiates itself from its peers like MapMyIndia and Genesis Limited, which mainly are into data capturing work. So, CNSys Tech basically outsources the data capturing part to the other companies, and thus has an asset-light model kind of business. And currently, 55% of the geospatial revenue comes from the water segment, supported by government initiatives like the Jal Jeevan Mission and river interlinking projects. The second business of the company basically had acquired one US-based IT engineering company called Allegro in FY22. It provides technology engineering services for various verticals such as two, three-wheelers, passenger cars, commercial vehicles, etc. General Motors is one of the biggest client in this is the biggest client in this vertical for the company. As of now, the company has an order book of 1390 crore, mainly into the geospatial business, to be executed in the next 18 to 24 months. So over the next 3 to 5 years, Ciencys Tech expects to grow exponentially without compromising on margins substantially. The growth will come from geospatial and the data center space, as well as through inorganic acquisitions. Q4 generally is a strong quarter for the company. Stock is currently available at 51 times TTM EPS. One can accumulate the stock on corrections for some decent returns in the medium to long term. That's it from me. Thank you.
Yeah, apart from this, we met the management of CMS Infosystem on Friday. Company is on steady growth path and has consistently delivered comparatively better results and shown around anywhere between 15 to 18% CAGR growth for last many years. The performance is likely to continue in the coming period as well on the steady path that is around anywhere between 15 to 18% growth and margins of anywhere at around 25 to 27%. So apart from that, CMS that is in cash management system has seen some positive tailwind on account of one of the competitor, that is AGS Transult Technology, that is also in cash management system, has seen financial trouble and are seeing business reducing. So benefit of the same will be going to other player, including CMS Infosystem, which is the largest player in this field. So outlook for CMS system on that account has also improved as the lost business from AGS will be transferred to some of the competitor, including CMS Infosystem. Stock is trading at around 18 times FY26 earning, which is comparatively lower if we compare it with the recent past. So outlook for the CMS system for near to medium term is positive. And we may see target of somewhere at around 600 over a period of 1 year. That's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are expecting gold prices to pull back around 88,000, and for that one can sell around 88,000 with a strict stop loss of 88,300. Downside again 87 700, 500 is the level where one can book profits. Silver to pull back till 89 500 is expected, whereby for trading purpose one can initiate a sell with a stop loss of 99 500. On downside, prices should be supportive at 97,000 to 96 500, whereby one can also initiate a buy around 96 500 for a pullback. In metals, copper, we are expecting a pullback. So buy strictly buy with a stop loss of 893, and again on upside 904, 905. One should book profits. Also for trading purpose, 908 is the level where one can sell with a strict stop loss of 913. And zinc, we are expecting prices to pull back. So for trading purpose, one can initiate a buy around 274.50 with a stop loss of 272. On upside, we are expecting prices to test again 278 levels. In crude oil, the view remains positive, though prices are trading in a range, but buying on dips around 58.70 is recommended with a stop loss of 5800. Upside, we are expecting prices to test 59.80, 6,000. Wherein natural gas prices are expected to correct till to 335 on downside. So all in all, in a range, but for trading purpose, one can initiate sell with a stop loss of 350. That's it from us. Thank you very much.